Hello, everybody. Good morning, good evening, good night, wherever you are in the world. Currently, it's PM for me over here in New York. But today we'll be speaking to the MUX protocol team. I'm joined today by Gene, the co-founder over there, as well as Hal, product manager from MUX. How are we doing, guys?
Hi, thanks for having me. Hi, it's Jean, and I'm the co-founder of MUX Protocol, and we actually used to be known as MCDEX, if you're familiar. And we just do the rebranding and launch the new protocol. And so far, everything is going good, and super excited to discuss here.
Yeah. And hey everyone, it's Hao here, and I'm the product manager at the MUX Protocol, and pleasure to be here.
Yeah, totally. And it's funny. I know we're going to get into it a little bit later, but MC Dex was definitely one of the first teams I actually remember interacting with you guys, like way back, like over a year ago now when I first joined Arbitrum, actually. So it's pretty cool to kind of come full circle here. But I think just generally before diving into the protocol itself, maybe it makes sense to just take a little bit of a step back. So maybe we can kind of address the current landscape of leverage trading generally. So, kind of from your point of view, what problems do you guys think needs to be solved to bridge the gap between derivatives trading currently on centralized exchanges versus the kind of derivatives trading experience that you get on decentralized exchanges?
Yeah, for sure. Actually, we have been like building the space of derivative for I think more than 3 years, and this question has been like hover around for in the past period of time, and I think like there are definitely several questions, several reasons for that. And the first of all, we will have to address, I think, is the liquidity. Um, as we all know, right now the liquidity overall in the DeFi is still small, and furthermore, and those liquidity are kind of scattered on different protocols and different chains. So I think the fragmented liquidity for sure is one of the key features that is kind of block some users from the centralized menus. And and the second thing I think like we have also talked a lot about is the user experiences, and which involve the speed for sure, and also the overall user interface. And also one more thing that I want to emphasize a little bit right here is about the trading cost. That, as we all know, like right now the trading cost like is relatively higher than the central exchanges, and it's not only included the transaction fee itself. It actually, for the derivatives market, the trading cost like involve a lot, which involve the prices, and which involves the which sorry, I should mute my yeah yeah, the prices and etc. Yes, it's like working time for me, sorry. And yeah, so I think the trading cost right now is one of the things that concerns a lot for the users. Another thing I want to emphasize a little bit right now is that the differences between the pricing mechanism on different and margin parameters on different protocols also like is cost is vast, and they are causing some like concerns and causing some like unexpected like complications for the traders if they want to trade on a certain event trading venue. So yeah, overall I think these all kinds of use not so friendly user experiences is definitely one of the reasons that I think is kind of block those users.
Do we think that a little bit of a tangent here, but do we think that like the amount of leverage is like one of the main, like one of the main things maybe bringing people either to decentralized exchanges or away from decentralized exchanges in terms of trading generally. I feel like most of the leverage positions usually aren't that big, but I think on MUX you guys are like 100x, right?
Right.
Like is the
Yes.
max?
Yes.
She.
Yeah. Yeah, I think that's a good one. That's a good one because I think leverage is definitely one of the key concerns from the traders when they are trading when they are choosing a trading venue, and and in our platform we observe that some like we do observe some like traders that they go directly for 100 leverages, and consider some context that right now, like in some central exchanges, like they because of the regulation that they already have no longer the higher leverages. So for the DeFi space, that we do think that the decentralized exchanges with a higher leverage, that is an opportunity actually for us or for other protocols that with a higher leverage that kind of can attract those kind of high risk preference traders to onboard them.
Yes, and we're definitely, to be clear, I think, feel free to use these levels of leverage as up to the point where you think you can handle it.
Right, yeah, it's pretty risky.
Yes, exactly. So I think on that note, then maybe we can kind of touch on just that. Then what you mentioned earlier here, but you guys used to be MC Dex. I guess the main question here is why the change in branding, and did anything else change alongside that, like in terms of like protocol wise or like project wise itself, besides the branding? I mean.
Yeah. Actually, the general idea behind the rebranding thing is that we hope the new version protocol and the branding name can perfectly match each other. Because like in the past 3 years, we have been continuously building and shipping. So for the new protocol, besides that we have been continuously working on improving the trading experiences, we also put a lot of effort on the liquidity side. For example, that we have introduced a concept called universal liquidity, which means that we kind of unify the liquidity that is right now fragmented in different chains. For example, the traders on the Arbitrum can enjoy the liquidity of Avalanche. So this is something that we kind of have a novel approach here to solve the problem that I mentioned earlier about the liquidity. And we also introduced another concept called the liquidity multiplexing, which is that the MUX LP not only is providing liquidity for the leverage trading on our protocol, but also the idle assets is doing some yield farming on the third party DEX like Curve, etc. So this is a kind of to improve the capital efficiency that because especially in the bear market that there might be some idle asset just in the LP pool just lying there and doing nothing. So we kind of introduce this mechanism to maximize the profit of LP. So these two layers are some like novel approach that we have, and so that's where we kind of think that we should have like a name that is kind of match this to novel approach. So then we find the term MUX, MUX, which is short for multiplexing, and that is actually a telecommunication term, and it means that it can combining various signals into one signal and through a shared medium, which is to like share the valuable resources or to improve the efficiency, which is exactly the essence of MUX. So that's kind of we conclude all the ideas and come up with the new name MUX protocol. And as following, besides the name itself, we also introduced the new tokenomics, which I think most members of our community are quite interested in to know more, is that MCB then is still the platform token or the protocol main token, we may call it, and we introduced a new token which is MUX. That is a reward token. It cannot be transferable. It only to kind of reward the contributors of the platform right now. And currently, you basically have two ways to get the MUX. One way is to stake your MCB, and the other way is to become a MUX LP. So this is two simple ways to get a reward token of MUX. And besides that, we also introduced the VE model of Curve. I think like most of us are quite familiar with that. We could like stake MCB to get some reward of MUX token, as I mentioned, and also some protocol income. Just kind of align the token holders and align the interests of token holders and the protocol overall long-term goal. Yeah. So yes, that's pretty much of it. That about the change of name and tokenomics.
That's really cool. I think actually I'd love to dive a little bit deeper actually into primarily the two first things you mentioned there. And just to kind of start off with saying that it's really nice to see that with your rebrand, one of the main focuses was to make MUX now a more like ecosystem focused project versus kind of you guys building in your own kind of siloed box in a way. And in this case, maybe we can talk about like the second thing you mentioned actually, because maybe it plays a little bit better. But like you mentioned, like that there are efficiencies that you get from plugging in idle assets into third party products like Curve or any other pools, so people can get yield even if the MUX protocol itself isn't using it, which is really cool because that's not obviously possible in traditional finance, right? That's like something that's really, really just unique to crypto.
Yeah, actually, we came up that idea is like something we think we observed that is might be one of the key pain point for the all the AMM pool right now. Like if we take a look at currently the AMM pool, like there are some like certain amount of idle assets lying there, especially right now we are in the bear market. So that's kind of the background that we came up some idea to maintain the a certain level of the profit of the LP. So yeah, so that's something we are thinking behind the hood.
I think then the other thing I'd love to touch on too, and maybe just kind of like understand how it works, is universal liquidity. Like, how is that possible to kind of leverage, for example, liquidity on a different chain if you're using Arbitrum, for example?
This is where our PM jumping help.
Oh yeah, hey guys, I'll jump in here. So yeah, so how the universal liquidity is, I'll start with, so first of all, like MUX protocol is like basically based on Arbitrum, most of it, because like most of liquidity is on Arbitrum, and also all the staking activities for MUX LPs and also the token holders are also happening on MUX. But on top of that, like the protocol also kind of added this like this multi-chain vision where it tries to just unify the liquidity depths on different chains. So like the users, like doesn't matter they're from any chains, they can also enjoy like a kind of streamlined user trading experiences and also liquidity depths. So how this works and how this can work is the protocol do have a unique module in the center called the broker module, and it's like a monitor that kind of observes like the liquidity across all the deployed chains. So currently, MUX is deployed on Arbitrum, BSC, Avalanche, and Phantom. And let's assume, like, say, Arbitrum holds like 500 ETH of liquidity, and the other three chains each holds like 50. So in this case, the universal liquidity is treated as 650 ETH. And in this case, doesn't matter the user from any chain place the order, like the total liquidity they can use like for long position at this moment will be the 650 ETH. And in this entire process, the liquidity is not actually moved. Like when the user place position, take profit, they will just take profits from the available liquidity that's on that chain. But in the case if that chain, like the reserve liquidity on that chain, is not able to afford the user's profits, then the user will redeem a ton of like a redeemable token or like a chip token. In this case, they can transfer this chip token maybe to Arbitrum and then redeem their profits. So yeah, it's kind of yeah, how this works in a simple sense.
Interesting. Okay, hold on. Let me just try to make sense of this real quick. I'm going to use a silly analogy, but I think it may work.
Yeah.
It's almost like, um, say for example, you're at a casino. You make a big bet, you win very
Yeah.
big, but the casino that you're at doesn't have enough money to pay you out. So instead, they
Yeah.
give you a voucher for the one next door and say, "Hey, you can
Yeah.
just go over there and take the rest out over there."
Yeah, it's more like a same casino but 4 separate tables. And then if this table is not able to afford you, give you a voucher, you go to the next table. That kind of
Yes.
thing. Yeah.
Okay. No, that's very interesting. Actually, that's so cool. Can you like um what? Okay, so why choose that type of design specifically? Like, is it were there any other ways you guys found to maybe like have the universal liquidity work? And if so, like, why choose this way, you know, versus the other ways?
I mean, one of the major like thinkings behind this, like first of all, is about like asset safety, right? Because if we were thinking like if we can maybe really just bridge the assets around different chains and then becoming that type of universal liquidity. But in that sense, like we all know like how not I mean, maybe that's not correct, but like bridging services, they're just like it's like still like a dark forest. So there's like potential risks and for the assets, especially for users' assets. So in this sense, we were just exploring a way that if we can make like unify liquidity without actually moving things around, and that's when we got the idea, maybe having this middleman or say this middle boat in the center to help to execute like the orders like from the user place on the front end, and then also filling it on chain, and also in the middle of it, like get the prices and then get the correct liquidity statuses. That's kind of the context behind this design.
Yeah, I will quickly jump in here, and I think that is probably an edge of being a derivatives, because we are not the spot market. That is not a like real asset that you are swapping right now. Actually, for being a derivatives, we're just like deriving some prices, deriving from prices from an underlying asset. So I think being the feature of derivatives kind of give us this kind of inspiration for doing like this, because we just need to like um, gain some like moving some of these virtual assets kind of here. It's not like we're just swapping the real assets. We don't need to move the assets around. Just like derive some like pricings from there.
Interesting, interesting. By the way, before I move on, I just want to make sure I properly introduce Jaden, head of BD at MUX. Just making sure that you're on now, Jaden.
Hey, thanks everyone. Yeah, glad to be here.
Awesome. I think then maybe continue on that note there. Like, so these design choices that you guys have gone with, like how novel is that to MUX? Like, is this similar to what other leverage exchanges are doing currently? Decentralized exchanges are doing, or is this like something completely new? You guys have kind of built from the ground up.
Yeah, I think one of the things we would really want to highlight in the design, like it's kind of like the mindset behind the design. Not really saying like we are the only ones doing it, but we are really trying to push this is like being trader oriented, to really kind of understand traders' needs, especially on-chain traders' needs, and then like building just tailored interface features, and then like adjusting the metrics just to kind of match with that need. That's kind of the like the mindset behind it. And then in terms of like the design, um, first of all, like the universal liquidity, we just discussed about. And then, yeah, that's kind of on the overall trading experiences based on the liquidity depth perspective. And then the other thing is also we do offer zero price impact trading for whatever sizes that the pool can handle, and also with up to 100x leverage. So in this case, definitely everyone in the Arbitrum ecosystem, outside ecosystem, knows JMX. So the MUX LP pool setup is kind of similar to JLP pool, where it's a like a multi-asset pool holds a portfolio, and when traders place orders, it will just be executed with zero price impact. But just on top of that, there's also the multi-chain, like the universal aspect of it, and also with up to 100x leverage. So really trying to suit like different traders' needs. Like for long-term traders, like use like maybe they prefer to use low leverages, and for day traders or someone just really good with like just capturing even the tiniest like fluctuation in the prices, like 100x also can be the way to go. Yeah, so it's really kind of just trying to build a product that can just make trader just having the most optimized on-chain trading experiences. Yeah, and also there, like Jane mentioned about like the liquidity multiplexing, that's also for just figuring out a way for the protocol to earn profit, and that even when like trading volume is low. So like the liquidity multiplexing is also related to the broker module setup, which is also kind of unique in the MUX protocol. And on top of that, if we talk about like governance and like say the protocol growth, like MUX also introduced the protocol owned liquidity mechanism, where 50% of the protocol income will always go back to the liquidity pool to make it deeper, so we can support higher and higher trading volume in the future. So and like by yesterday, we just hit the $1 million so protocol income milestone. So in that case, 500K of it actually went back to the MUX LP pool, which was pretty exciting. And also the other half is real yield and goes to all the MUX LP stakers and protocol token stakers as real yield. So yeah, that's also kind of one interesting design that on MUX. So yeah, the trading part, the liquidity setup, the the income earning rules that we offer, and also the profit sharing and the growth of the protocol itself. That's where we kind of locate ourselves and how we kind of differentiate from other protocols on the market.
And if I may add, I think something else that also, I don't know why, I guess I never really questioned until now, is like, I guess the question is twofold, right? How is it that, just generally, I guess, these decentralized leverage exchanges are able to support higher amounts of leverage versus centralized ones? And maybe part of the same question there is like, what determines the limit of how high you can go for a leverage position? As in, like, why is 100x the limit for MUX when maybe it could be 200x or 300x or something? Obviously, it's more risky. Yeah, I know that, but I mean, like, is there like what's limiting that? I guess is the question.
Yeah, I think personally, I think three parts. One is like again liquidity depth, like just how high the position size that a protocol can handle. That's one part. And then the second one is also about like the pricing, and then like there's like the explicit pricing, and there's trading cost, and then there's also the implicit cost like max leverage and also maintenance margin, liquidation fees, and liquidation threshold. So when it comes to a position, say with 200x like position, like with the liquidation threshold, like even with like maybe like a 0.5% price fluctuation, or say even like a 0.25%, it will get liquidated. So the experiences won't be that good for traders. But if the protocol try to really lower that threshold to meet the trader's need, then the protocol itself becomes very risky, and then the LP will possibly like take a lot of hits. So it's all about like kind of finding that sweet spot, like to keep the balance between like protocol risks and also like trading experiences. And I think that's like what I think that's also I'm assuming a lot of like centralized exchanges they're thinking behind their design as well because there are exchanges that offers up to 100x, but not a lot offers like over 100x, right?
I wonder if there's anyone that actually uses 100x regularly and actually is, still around.
uh, on MUX, like we did, we did, not we do, but we did. There were traders and just super good with like I have to be honest, super good with like just trading with that 1% fluctuation and it's like yeah, pretty insane.
Yeah, I think sorry, just quickly to hop in here. I think like the fundamental like difference between the centralization and decentralization is the way that we provide why the price like for the order book model and for the AMM model like because we can now do an order book model on chain. So for the AMM model that like doing higher leverage like involves the like as Hal mentioned that the higher leverage involves the way to find the balance between the LP and the traders, which is pretty much one of the key features or key design I think during the design of the leverage trading protocol. So yeah, so I guess that's the reason why I guess that's the key why like right now like some protocols are kind of going much higher and some are lower because this is kind of a novel AMM design.
No, yeah, it's really cool. Kind of just hearing about the way you guys have kind of redesigned this since when you first began. Uh, I think then, so you guys have done the rebrand. You've implemented all these kind of new, kind of novel changes here. Uh, what can we kind of expect from in the near future? I know it probably sounds annoying asking you for more, even though you've just done all this stuff. But what's on the roadmap for Mux?
So yeah, currently what we're doing is we are just continuing to just monitor current product experiences and user feedback and just make improvements accordingly, like adjusting metrics or adding certain like small tweaks to the product and adding like new like features like make allowing users to see their like period like trading stats or download their stats as record. That's one thing. And the other thing is also just to pairing with our kind of marketing campaigns, like launching new features. Like we recently added our referral programs, and also there's the new leaderboard feature. And then on top, like just behind all of this, we're actually working on the MUX version 1.5. We're calling this. So it is we're trying to resolve some of the known maybe not issues, but some of the shortcomings that we have with the product. So with the version 1.5, we're going to improve the liquidity depth like significantly and being able to support like larger position sizes and volume, and also just to further unify user experiences because we're already on this like unifying like liquidity depth path. We're going to trying to just unify like experiences like further with like even like pricing mechanism and other things. So, and this is expected to happen in around a month. We are looking to, deliver the version 1.5 at the end of November, which is, yeah.
Exciting. Yeah, well,
Yeah.
one context here is that right now, actually, for MUX protocol, one of the issue that we are pretty eager to solve is a liquidity issue. So for the next like version, we are pretty confident that we can solve the liquidity issue. So yeah, so because right now, like based on in the past 2 months, we have received pretty good feedback from the traders that the trading experiences for MUX Protocol is not bad. So that is something that we see as one of the I would say one of the key milestones that in the future that can help boost the trading volume in MUX regarding the not only regarding trading volume but also the profit, etc. Yeah, pretty excited.
Yeah, yeah, and just adding on one point, I think, especially in a bear market, it's really important to see whether DeFi protocols can actually survive through the winter. And with what we have built so far, unifying all the liquidity across all the chains, especially in a time where liquidity is actually scarce, and also having this protocol own liquidity where we try to make the protocol as much as possible like self-sufficient. I think these are things that we try to ensure that the protocol can survive a winter, because all protocols can survive a bull market, but not every protocol can survive a bear market. So I think it's also quite exciting for us to see whether all these things that we have in place and have prepared for the bear market will it pay off in the future.
Definitely well said on that last point as well. Did you guys also have any? Should have asked before, like any kind of plans on, like partner integrations or like collabing with any other ecosystem projects? And if this is alpha, then you don't need to tell which project you're going to do it with.
Yeah, we do. So currently we are going to integrate with another bridging services. So just a like a smaller one, but then there's going to be bigger ones after like version 1.5 goes live, and then we'll see some big announcement there. Stay tuned.
Yeah. There are several directions that we are exploring right now. Like besides the bridges protocol, we are also like actively working on the composability part. For example, the MLP integration or the options that or other interesting financial products that can build on top of MUX. We are super welcome to talk about that. So if anyone or any protocol that is is interested, welcome to DM. Yeah.
I love that. Yes, I think that truly is like the bread and butter of this ecosystem. I always say it, but and I never get tired of saying it, so I'll say it again. Um, I think it because like obviously Mux is I'm sure like a great platform for users to just use like directly. Leverage trading and also getting a hold of that MLP asset as well. Um, but I think like protocols really do unlock so much more like usability and usage utility really when they kind of enter that infrastructure level when there are other protocols building on top, right? Like we're pretty much just kind of using that classic DeFi Legos kind of a concept that we've known in crypto for so long now.
Yeah, yes, for sure. And I believe that composability is also back to the original topic. I think like composability is one, it should be the one that we can like kind of rival the centralized exchanges that kind of enable like much more financial products that can like can out of box.
Totally agreed there. Yeah. I think with that being said, we do have a couple minutes here, I think, for community questions. If anyone has any questions they want to ask the Mux team, feel free to go ahead and raise your hand, or I guess request to speak technically, and I'll be happy to bring y'all up. All right, we're bringing up Olu Travels. Olu, you have the stage. I think you may need to speak up a little bit, Olu. You there, Olu?
Yeah, can you hear me?
Oh, yep, you're good.
Good evening, everyone. It's actually morning here. It's 4 a.m. already. I think about 21 minutes to 4 a.m. in Nigeria, yeah. So I had to be up to listen to the space this midnight. I just have a question. I want to ask about the Arbitrum Guild that has been running on for months now. The old speculations about an airdrop coming on to participants. So I just want to know how visible, although we're told that there is no promises, but it's always been there have always been speculations for months now. So I just want to know if we should put our hopes high or it's just mere speculations and nothing more.
Yes, I can answer that question really quick. But if you have a question for Mux, I prefer you ask that after this. It's definitely speculation. Just letting you know. And you should definitely go to sleep, by the way, if it's 4 a.m. where you're at.
Yeah, it's 4 a.m.
Okay, yeah. Thanks for coming up, Olu. But yes, it is definitely speculation.
Okay, thank you very much. That was all. Thank you. Thank you very much.
All right. If anyone else has any questions for Mux, please feel free to raise your hand again. And if not, we'll close out shortly. Also, if it's 4 a.m. wherever you're at, if you guys are listening, I mean, you know, it's pretty early or late. I don't even know. Okay. We are bringing on. Oh, maybe not. Just added someone and they left. If you meant to come up BTC, let me know. I can just add you back on. I think with that, though, we can probably close out just in case. If anyone does have any questions for the Mux team, you can definitely ask them afterwards. But I think appropriate question here. For those who do actually want to get in touch with you guys or want to join the Mux community and participate either on the protocol itself or maybe, who knows, contribute to it, what would be the best way for them to do that?
I think there are a couple of ways that like you can reach out to MUX Twitter with the Twitter handle is MUX protocol, or you can DM me. It's Jean _MUX, and or you can join our Discord. It's in the bio of our Twitter page. Yeah, welcome to join our community and feel free to ask any question if you have.
And of course, make sure not to wreck yourself. That being said, thank you guys for joining today.
Thank you. Thank you, Hunter. Thank you, everyone.
Yes. And
Thanks,
for those who
Hunter.
joined late, go for it. Sorry.
Yeah, thanks, everyone.
Yeah, so no worries if you joined late, by the way. This AMA was recorded, so you'll be able to listen to it back. as well. Yeah, thank you guys for coming on today. Appreciate you guys. We'll look forward to seeing what MUX brings.
Thank you. Bye.
Thanks. Take care.
GN.